the thing, right? Though, having mattress money, that emergency, something happens, doomsday. I have cash at home. I can get by for 3 to 5 months.
Yeah, I mean, for me, like those kind of things, like is when you look at government seizures. Anytime that if there's a lot of stories where people will get arrested for false reasons, but they take all your stuff.
Yeah.
Take all your money, take all everything you own.
Well, there you go.
Let's dive right in. Hey, what's up, everyone? I'm Abel Perez.
Jose Rodriguez.
Rohi Zachariah.
And this is the Weekly Jargon. And today we're talking money, how it affects you. Should it go digital? Should it stay paper?
Yeah.
Something tangible, right? We're going to dive all up in there. But anyway, like and subscribe if you haven't already. We'd like to hear your feedback. Enjoy the show. Let's dive right in. So, gentlemen, what were we talking about here?
Well, Roy's wanting to get us all digitalized, and I don't like the digital coin, but it seems like that's the way we're going. I think we're all using the Venmo, the Cash App, Zelle, and we're using all these other apps that are starting to go digital. Mm-hmm. So cash is probably becoming just slowly extinct, right? Mm-hmm. I think people are starting. I go to certain places where they no longer take cash. And I'm like surprised, because I figured cash is king. They've always said cash is king. Well, cash is no longer king. Now it's the matter of having all these apps that provide an easy access of making purchases and or services, right?
No, and that's, we went to a basketball game, like I told you a couple months ago, and there was no cash option. Like I took cash thinking like, okay, I'm going to buy my dog and my drinks, and you go and everybody, it's card. There's no till. You put your card in the machine. So it's kind of, they're forcing you to.
And the funny thing when you say that is that they look at you kind of different now because you carry cash. Yeah. Back then, I remember that if you didn't carry cash, you were trying to scramble to find a card that actually worked. Yeah. There's nothing like cash only, right? But now it seems like you go in there like you said and you want to pay cash. Oh no, only a credit card.
Yeah, we'll dive into each of these topics, but one thing I want to ask you guys is, how do you guys feel about the fees, with all the electronic services, right? Because you're being charged for the Cash App, for the Venmos. There's a fee associated with it. Mm-hmm. And when you think about it, when you're going to put gas and you're paying 10 cents more at the pump, now it's almost like 20 cents more per gallon at the pump if you use a debit or credit card versus cash. Yeah. And all these other features that Cash App, Venmo, instant deposits, it's $2 or $3, which in many cases can be, 10 to 25% of your actual, purchase. Mm-hmm. In the long run, how much money are you actually losing, on a weekly basis? I thought I'm going to keep track of this every week, Go into the convenience store and you buy, a candy bar and a drink just to get some sugar in the blood and, get boosted up for the evening. And, boom, they charge you $1, and at the pump, I probably paid $2.50 more. So that's, $3.50. And by the end of the day, it was probably more like $5 or $6. Doesn't seem like a big deal, but you multiply that by 365 days, and that's some serious money now.
You multiply that by millions of people that do that, and now you got yourself a really...
Yeah. Well, you got yourself an industry, right?
Yeah, exactly.
The entire industry.
And I think that's where crypto did it in the adoption of that idea is that, like we were talking about is if I need to send money or spend money or anything, the fees associated are so much more affordable than your traditional banking system. And that's where, when you say digital, I am to some degree in favor of the digital. I like the idea and the fact that nobody... in a sense, has that control. Nobody's overcharging me. I'm not paying these crazy amounts of fees to just use my own money. That's my money. And it's still secure. It still has a means to have a checks and balances, in it. But yeah, I agree. For our business especially, and I think you're going to start seeing the trend more as business owners are now basically having the customers pay the fees for them, because... Right. Traditionally, your fees as a credit card merchant are going to run 2 to 3%, and you're talking about thousands and thousands of dollars. I think for us, it was $1,500 a month that we're just spending or losing in credit card fees. I had to flip the bill. I couldn't justify that anymore.
Yeah, and to that point, Abel, as a tax preparer, I was used to the notion of getting paid cash for many years. I'm doing this since 2009. But up until about 3-4 years ago, did I start really adopting what people were wanting to pay me with. And a lot of it was, do you have Square? Do you have Venmo?
Yeah, exactly.
Do you have Zelle? And I go, well, damn, I think I'm behind then. I think I have to reinvent myself to be able to make sure I can capture what they have. Because other than that, you know, I mean, there's structures within the system or the software that you can collect through the refund, but it charges an enormous amount of fee. And people don't realize this, but when they go out and do their taxes, a lot of times they don't see the added charges that are there when you take it from the refund. I mean, it can be as little as $10 and as much as $60 to $80, depending on where you're at. And there's fees that are added. So I figured, well, shoot, if you use the Square, then it's only going to be $5 more. And I think that's cheaper than paying. So I had to adopt these services so that I can start, you know, making it easier for customers to want to pay. Because cash, I think now it's become rare. You know, and as much as I mean, I like to keep it sometimes when I have it in my pocket. I don't want to use it because I feel like, well, I mean, I don't get it often as I used to be. Right. Yeah. So now I can carrying a $20 bill is like, okay, I got a $20 bill. I feel like I have to hold on to it as much as I can. So I'll use my card first, and I keep the cash unless it's something that only takes cash, and I'd rather do that.
And I think when you say digital dollar, I think the structure there is not going to be what people are thinking when we think of crypto. So crypto is crypto because its growth is on a projected path. Like there's only going to be so much added to the ecosystem on a regular, you know, time schedule. I don't think the dollar is going to be that way. They're not going to start with, you know, $5 trillion and then, you know, it's just going to slowly add. They're going to say, oh, we need another $1 trillion, just like they do when they print our money right now. They're going to auto-inflate it. And that's where I would disagree with the digital dollar, is if they had a way that says, okay, this is the dollars, and you can see how every dollar is moving, and then obviously you have to add some to keep the system running, then okay. But it's not going to be that way. You know, they're going to play with the money. They're going to make it.
You don't even have to have a printer to do it. You could literally just update the digits, the numbers. Yeah.
And that's what's scary is exactly what's happening today is that we see this roaring inflation because of added the expansion of the currency. And, you know, it is scary to think that now every little transaction that you do, I mean, we talked about Big Brother looking at you. Every transaction that you do can pretty much, in a way, profile the type of shopper, the type of deal, because you're doing it now. And it's sad to say this, but we are now in an era where everything that you purchase, everything has some data attached to it, and it helps serve the industry, especially to cater to your needs. And what exactly would Abel want based on these purchases that he did here at Target? Abel would probably be, based on the profile and thousands of others like Abel, he's probably in line for this. Let me go ahead and solicit him for this right now.
Yeah. It's a, you know, group of people in a room like this, a little bit smarter than us, that sit and say, you know, Target, you know, how can I, you know, how can we sign people up for rewards? We have their email address. We can send them coupons. We know this is what they bought, right? And so this way we can generate more sales, right? It's all about how do we better advertise. And so, you know, you are going to see a lot of that, and you continue to say it or see it. You can say something out loud, go onto your Facebook, and an ad comes up on whatever you were talking about, right? That's real stuff that's occurring. Your phone's listening to you. You Google something. You say, hey, my Achilles tendon hurts. Why does it hurt? I play basketball, regimens for that. You're going to see all these creams and, you know, supplements that you could take geared towards that, because they know that this is what's on your mind right now, right? So, you know, anytime I do think of digital, it is that fear of, you know, who's behind it all. Can it get hacked? Can it get wiped away? And I think in a big way, that's why we're willing to pay the service fees for banks, because of the FDIC assurance that we get from them, right? We feel comfort. You know, back in the days, they used to build banks that looked like forts, right? Big cement structures, because it gave you that sense of that's a secure place to store my money, right? We still we still long for that sense of security when it comes to our money, even if it's only $100 that you have in the bank account. You want to know that that thing's protected, that a website's not just going to go down and where's my money? How do I access it? Who do I go to? And, there's nobody there, right? And I can see if we were in this crypto world, I can, that would be one of the greatest terrorist attacks, right? Let's cut off their people from their money. Yeah. And hold it hostage in this digital world, and watch them go, watch them go into chaos.
And again, when you look at digital, like every crypto coin has a blockchain. You can go in without knowing it's your bank account. I can look at your bank account, see how much you have, see how much you've sent, and that would give you a level of transparency. I mean, it'd be great to say this is a government account. Mm-hmm. Here's how much money it has. Here's where it sent all of its money, and it'll let us keep them accountable. Yeah. But I don't think you're going to get that. You're just going to get this. Well, you got to trust us, just like we do now. You can't, right. I mean, to some degree, you can't go look in the government's bank account and say, "What's that $100? Who did it go to? What's this other bank?" It takes right. a lot more work. So
yeah, and Abel's deal is that we had these walls or these forts built. I mean, we have these now, but on the back end, you don't know that they only carry this much money. Fractional reserves, the banks are allowed to keep only this amount of money, 10% of your deposits. I mean, that's scary to know that. In a digital world, I wonder how that looks, right? Is it easier, controlled easier? Will you have bank runs? I mean, hey, I want to get my money, because it's only digital now. Now it's just something that you can transfer. Numbers, right? And that's what's scary to me, is that I don't know what that looks like. I think over thousands of years, people have felt comfort of having something that's tangible. You said it earlier. And gold, obviously silver, coins or whatever, copper, whatever the case may be, I think people feel very secure that, hey, knowing, even crypto for that matter, I mean, even though it's digital, the fact that you said it's the blockchain technology that only mines so many coins or so much cryptocurrency, I think that gives you a sense of comfort that there's only so many, and there's only so many you can have. So therefore, that gives people somewhat confidence, and that's why I think Bitcoin has survived to this day, even though people have criticized it. People still go to crypto. They still go to this particular Bitcoin. It's at $28,000 last time I saw it. How the hell does a digital coin go that high?
It's trust. I mean, it's same thing. Why do you say, why is gold so much? It's trust. It's that you can't magically make gold. Yes, you can mine it, but there's a cost, and there's only so much added to the system.
But it's not tangible.
It's not. I know, and that's where when I talk to people that are in the older generations, they have a hard time. It's because you say tangible, but a lot of things aren't tangible. Your bank account isn't tangible. It's a number on a computer screen.
So back to Abel's point, if it gets hacked, how do we get access to that crypto?
Yeah, because when Silicon Valley,
how do you eat?
When the Silicon Valley Bank went down, it was, wait, give us 2 weeks, we'll figure this out, right? It was, you're going to get your money, we're going to, do this correctly, 1 to 2 weeks, and everybody got their money. There was no chaos, right? Is there response or something in place in the crypto world to mitigate that type of fire?
Well, again, we don't know how they're gonna make it, but there's even though it's digital, there's still a tie to the real world. Meaning, like, when we say wallets, like I can have a digital wallet that's my wallet. Nobody is control of it. I'm the only one in control of it. Just like if I had $100 in my physical wallet, when you say banks, crypto has the banks. They're called exchanges. It's where you go and you take your digital and you make it into physical money. My point is, if you make a digital dollar, like I said, why would I need a bank except to get my money into a different kind of currency?
Got it.
Right? So if I'm going to pay you, like right now, we have Venmo. Venmo is essentially PayPal is its own bank. I don't send it to Central Valley that sends it to you. We just exchange between our own bank accounts.
So now and the wheels are starting to spin. So kind of to your point is that we won't need these brick and mortar type of deals anymore.
Maybe
right?
for a loan. I mean, I think the loan thing is where it gets kind of confusing when you say, okay, I'm going to buy a house with money that essentially doesn't exist. So they'd have to allocate their own money, right? I mean, like when you take a loan out from the bank, let's say I got $100,000. Don't they have to have that $100,000?
Yeah, but
should they have that $100,000 already?
It's wired. The money, it's funny because the money is wired. They should have it. Banks that have that are lending you that money should have it according.
They're paying to somebody.
They're paying
right?
to some,
Yeah.
but it's kind of weird because it's not like you have a briefcase of money that you take to escrow and the bank says, "Here's the money," or
Yeah,
"Here's
it's parked there.
for the seller." Right? It's all digitized, and they wire money. Then the escrow then wires money to the seller. Seller gets the money to his account, and it's not. I don't think I've seen where sellers say, "Well, I want cash. Can you give me a briefcase of cash?" It's more like it's wired directly to their account.
Yeah.
They have these digits in their account that show, "Hey, I have over $200,000-300,000 for that purchase, so therefore I'm okay." But I mean, going back to the same thing, it's not tangible. I think we've gotten used to the idea that we've accepted that. And although we're fighting it and resisting it, I mean, I think it's going to happen. And it's unfortunate because for those of us that think that tangible assets are always good to have, we talk about the gold, the silver, the actual cash. I mean,
But it's what I'm saying is if it's an all digital, and right now the bank run is because I put my money into these numbers that are not there. But if it's digital, it's there. You can't not make it there. That's why I say there really can't be a bank run because if I have $1,000 in digital assets, I have $1,000 of digital assets. There's no need for that bank. Is what I'm trying to say.
Yeah,
Like,
yeah.
The bank is more of a means to kind of like right now. If I lose my wallet and it has $100 in it, I lost my wallet. I have no way to do it. Where if I lose my bank card, I can still walk into my bank and they're holding my money for me. It's
Yeah.
there's some security measures in place, but
Well, what does that do to financing and loans available? Because if your $100 in crypto is there's nobody who has access to that capital to invest. I mean, that's the purpose of banks, right? That's why they only keep 10% of your money on hand is because the rest of it's being invested, and they're able to issue loans outright. Does that start to deplete those funds, or are they gonna just magically start? Or a bank's going to have to be self-sufficient where they're using their own assets, which means, hey, we don't have enough money coming in this way because it's all going through crypto. So we're going based off of the $1 billion that we have. And once that $1 billion is up, we're done unless we collect enough interest and we can grow that to $1.5 billion next year. And next year we'll be able to do, $500 million more in loans. And it's a much slower process, right? I mean,
but imagine this, and this is where I think again you have to dive into the crypto world. Is why does a bank the only ones that loan? In digital world right now, you can go to these exchanges and loan your own money at your own percentage rate. I can decide, hey, you know what? I got $1,000. If you want to borrow it, you'll pay me at 1%. I set my rate. Like, how great would that be, and what freedom to be able to say that it's protected still, it's in the exchange, there's still a system and a means to collect my money, and so I'm not like just, out of the money, but I have my own ability to set my own rates. I become my own bank.
who manages that?
It's
that
the
loan?
exchange. The exchange is the ones that are going to manage it. They're gonna insure it in a sense.
it's not Forex or anything like that. That one,
No.
you didn't give that money to that young kid, did you? Don't do that, man. I hope you didn't do that.
No, but and that's where crypto unfortunately has the dark side of people running off with your money.
That's what I think the biggest scare that I have is knowing, and I guess going back to the banks, is knowing that I have a bank, could be Wells Fargo, Bank of America, knowing that they've been there for such a long time. I would have never thought that the I've never heard of them.
Yeah.
I didn't hear of them until this thing happened.
Right.
But based on what I've heard, I mean, they were the 16th largest bank. So they had monies tied everywhere with joint venture capitalists and stuff, but or venture capitalists. I didn't know that they were this deep with money, but I mean, obviously. They had a run. So I mean, if you would have told me, hey, invest your money with me, I probably would have said, no, man, I don't trust that name. I haven't heard that name. Like you hear Wells Fargo, Bank of America, even Citibank. You want to stay where things are. You at least history has shown that these banks have survived. But I mean, with this digital stuff, who do you trust? I mean, who do we trust with digital? Who's gonna?
But again, you got to understand is that if I can spend my digital, if I can send my money and get my money and whatever without the need for converting it to something else, you don't need the banks. Because again, the only reason you have an exchange for crypto is because you have to take this coin and you have to make it into dollars because there's not an easy way to spend it right now. That's what the exchange's job to do is, okay, here's this coin. I need dollars because Jose only takes dollars. He doesn't take Doge or Bitcoin or anything. He wants dollars. I have to pay it in dollars. But if the digital coin is the dollar now, there's no exchange. There's no bank. I have my money. I send it to you. You accept it. Everybody around here accepts it. It's, it'd just be the same reason. Like if right now, if you guys had a means to accept Bitcoin, and why would you need dollars anymore? You have Bitcoin. You can spend the Bitcoin. You can buy your coffee, or you can pay your car loan, or you can do whatever with Bitcoin. Why do you have a bank? You don't need the bank.
So here's the thing. So why do you think then the central bank would want to control all currencies within a certain country, like the U.S., for example, right? Because we talk about these digital dollars. I mean, why couldn't we have exchanges with different banks, different digital coins that may provide a confidence for example, let's say Madeira had its own digital coin that's reliable because it's backed by the citizens of Madeira, the confidence in Madeira. Mm-hmm. But when you're backed by a bigger currency that has volatile issues, like hey, one year because of the economy, that can affect your dollar and how you spend it here in Madeira, right? I mean, do you think it's better to be somewhat fractions of a bigger central bank, or do you think it would survive? I mean, because look at what's happening now. Now you have the dollar that's being challenged by the Chinese yuan, or that's being backed by all these countries, or at least, I mean, but it's scary to think that because does that have an effect or an impact on our dollar? Right?
It does, but you say, why does the central bank want to have control? Abel said it earlier. It's because look at all the fees. Look at all the money they're making off of you spending your own money. And they want that control, because once they have that, they're going to set the rates. Again, I'm sure us sending money under their digital dollar is going to cost something. It could be a fraction of a cent, or it could be something significant, but I'm sure they're not going to just let us exchange our money freely like you can with a $100 bill. If I have a $100 bill, it doesn't cost me anything to physically give it to to Abel right now. But in a digital world, it does. In Bitcoin, it does. It costs pennies. In your Venmo, it does. It costs you pennies, but it does cost you.
So the crypto kind of seems to be the digital bartering, so to speak, right? I mean, it's that digital bartering. I want to buy what you have, your goods, but I'll give you some digital coin. And I don't think that's what the central banks want. They go, hey, you're taking away from what I do already, right? Exactly. That's my fee.
And
you're
doing it cheaper. And you're doing it better.
Exactly. So. That's what I'm saying. I would think that it'd be more efficient to deal with the local and say, you have something that I want. I'm going to pay you in a currency that we both trust, and here it is. And we know that currency holds value because it's a trusted currency. Versus something outside that has other factors that could potentially affect.
So what you're saying is, Madeira's economy may be more healthier than some town in Ohio, and so why should that economy there affect my
Correct.
value of dollar here when we all agree that hey, this brick right here is worth 5 cartons of eggs.
Yeah. But
in Ohio it's worth 25 cartons of eggs. You know what I mean?
But that's the birth of crypto. I mean, you were explaining like the whole idea behind it is that you can't trust anything in this world. You can't trust gold. You can't trust the dollar. You can't trust anything because you can always make more of it. And crypto is crypto because you can't make more of it.
And if you have to go through these specific mining.
But the mining is a means to, again, because there's no bank, there's nobody in control. You have to have workers. You have to have somebody, okay, Abel is going to send Jose money. We have to confirm that transaction. Abel has the money. Okay, now it's going to Jose. That's a process. So that's what mining is about. Mining is taking that transaction and doing the math on it to confirm, okay, he has the money. He's now transferred it to Jose. We get enough people to confirm so that there's a consensus that says, yes, this is true. It's now done. It's packed away and it's completed. Now, for you doing that work, Here's your pennies for doing that and helping the system move forward.
Yeah,
That's
that's a
crypto.
trust on a system that works with everybody.
Correct.
Putting that effort to make it help. But why is that? Why is that being challenged? I mean, where
Because again, they do it cheaper, and they do it without the need of somebody else. You know,
Well, that seems
manipulation, maybe, right? Is that what you're trying to get at? Maybe there isn't a lot of hands because this was created in a computer. And the technological advances of digital world, right?
I mean, essentially, your bank would become almost like a mining, thing where, like, if they wanted to make money, they would just set up servers to operate the transactions and getting their fees from managing the transactions. I mean, that's in the crypto world. That's kind of what would essentially have to happen if they want to keep making their money. Just like right now, where they get paid for taking your transactions, they would have to get paid for.
But who's to say that the exchanges don't eventually say, "Fuck, these banks used to make a lot of money. They used to charge 2 to 3%. Let's just charge 1 to 2%. People will be happy and they'll come over here." Now that we got them here, now we're at 2%. Now we're at 2.5%, and in 30 years we're back where we started, right? Just because there's always that desire for more money, more profits, right?
And there's more. I think there's more services where the funding is never enough. So you have to create money. And I think this is why the central bank would want to take control of that, because when you look over, especially a government looks over the amount of people in our country and the need, you can't just have a fixed amount of money every year.
Correct.
Because, there's demands for so many things, right? I mean, that's why you have politicians going out there asking for funding. Hey, we need funding for the military. We need funding for social services. We need funding for this. And next thing you know, money's created. Hence why we had a lot of the stimulus that took place, right? We needed that emergency package to take care of, hospitality, restaurants, businesses, everything that you could imagine was touched by the stimulus. And whenever there's a need of that, you have flexibility in doing that.
But imagine the United States in the dollar where you couldn't do that, but it was set on a set timetable that said every year it would increase by this specific amount, and you can never spend more, you can never make more. That's it. Wouldn't that give the dollar more stability?
I think it would give,
like that. And again, that's the whole principle of crypto. That's why if you did something like that, I would be in favor of something like that, because there's accountability. I know next year there's going to be 1.2 trillion, and the year after that there'll be maybe 1.3 trillion, and you're still getting the system that you need, which is, like you said, you have to keep increasing the amount of money.
Yeah,
you do.
Yeah,
but not today. I think Abel needs a new car. Let's print him $1 million right now.
Yeah.
Really? That's not how it should work.
Yeah, and when you're talking like that, I didn't attend it, but every year we do our budget meeting for Lions in our local Lions Club, and when we're doing our budget, it's like, okay, well, who are we going to cut checks to this upcoming year, right? And then how much are we going to cut those checks for? And so obviously we try to help as many organizations as possible, but the amount is dictated off of how much money we generated the year before, the previous 12 months, right? Yeah. And to your point, you can't possibly say, oh yeah, we're going to give $50,000 this year if we've only raised 40, because now, we're in the whole 10 grand. Or even if we have that in reserves, that's just bad business, right? So why operate like that? And that's that. To your point, it's the having the ability to say, well, we'll just bump up our budget to 70,000, and here write the checks. We have the money right there. It's printed out, right? Yeah. And then that's where you start seeing these deficits and continuing to grow year after year.
Yeah, because you can't take that money away. I mean, that's the thing. Once you printed it, they're not going to come back and say,
It's
"Hey,
in
we decided to burn $1 trillion to kind of help the money get better." They're not going to do that.
Well, that's what they try to do when they tighten, but obviously it has effects. And to this point, I mean, we are now on a roaring inflation. We talk bad about it, but at the same time, has it been more convenient for us in the way we do things every day? For example, the Starbucks, the going out and sharing a cab or doing something.
But you know what's different, and I think that's going back to responsibility. Those apps is still cash. It's still it's not a credit card. I have the money, so I can't Venmo you $100 if I don't have the $100.
Correct.
You know, so I like it because it's essentially an accountability thing where, you know, if you're going to pay me, I don't have to worry about, well, he comes back, his card got declined, or the money's there.
And I think a lot of like the street vendors or the local, even if you go buy something off the, I was going to say Craigslist, but like Facebook Marketplace, right? It is safer to get a Venmo or a Cash App because the money's there. It's been verified.
Yeah.
So yeah, I think that's that sense of security. It's not. I will never take a check.
Oh, yeah.
I'm not going to take a check and go meet somebody in public and say, here's your item and give me a check for that. Yeah. Because it's been verified. And I guess that's why,
But
I'm
even
willing
credit cards, the skimmers and the fact that it could be a stolen card and, they can contest that money and it gets there's
there's a lot. So for me, the electronic apps or, exchanging money electronically has been a major convenience. And I'm actually probably the ones that, you go to a place and you're trying to pay with your phone or your app, and you're like, you don't have that, because it is hard to keep cash on hand. There's always the fear of losing it. Once you lose it, it's gone. There's always the fear of being robbed. When you're out of town, you don't want to carry too big of a wad of cash, and you typically need a wad of cash for all the stuff you're doing on vacation or whatever the case may be. But there is, I know, like, even if you go to Vegas and you go to one of those pool parties and they'll give you a wristband, a little thing, and you can just scan that, so you don't even have to have your wallet, and it's safer, right? You're not having to worry about losing your wallet or having somebody rip off your card or anything like that, and you can kind of keep track on your phone of all your expenses.
Well, even the cash could be fake.
Cool. Yeah, exactly.
So let me ask you this then. What if banks, when you went to go make a withdrawal, instead of giving you cash, asked you what app you wanted to have the money deposited into? Would you be opposed to that?
I mean, like you said, it's cash. So knowing that you have it somewhere, I think,
like there's this new hip bank that comes out and says, look, we don't give you cash anymore. You want to make a deposit or withdrawal? You tell us what app you want.
But why use one if you can do that at the palm of your hand?
Yeah, you could already.
I mean, you can already do that. You can say, "Well, I got this for my pay."
So now you've made the jump to say we don't need cash withdrawals anymore.
Yeah, I mean, the only reason why I withdraw cash is because whoever I'm buying something from isn't going to accept anything other than cash. That's the only reason why you need cash.
But when you withdraw it, there's depending on where you withdraw it from, and this is the thing with ATMs is that you're looking at $3 to $4. I haven't withdrawn cash from a ATM for a long time, but I know that I'm looking at a $3 to $4, and just because I'm being charged that much, I would rather not do it. You know what? Screw that. But I'll go pay $2 to $3 somewhere.
No, it's true.
I just don't like that. But anyhow, I think this is a good conversation. I'm sure we can probably pick this up in a couple of months. We'll see what happens. Again, there's a push for a centralized digital currency. I don't know what's going to happen, if states are going to be okay with that or people are going to be okay with that. But it seems like we already somehow, we're doing it. Mm-hmm. We're doing it. We just don't know if we want to. I'm reluctant to let go of that cash because it's becoming a rarity now. Mm-hmm. And sometimes you're frowned upon because you have cash. But that used to be the way of doing business is cash is king. But now I guess it's in a plastic or a digital form.
My mother-in-law is always watching the news, and she's like, gets freaked out because you watch the news for 5 minutes and you get freaked out.
Oh yeah,
you're pretty scared. And so anytime there's something big, brewing, like when the war in Ukraine broke out between them and Russia, she calls. Make sure you guys pull out cash, pull out money from your bank and this and that. They're going to freeze our assets and all this stuff. And I think that was about a week where that was a real thing where they were saying, we could have banks frozen up and things like that. And what are you going to do, right? But again, I do think that that's, more relevant to the people who have hundreds of thousands of dollars versus, you know, my
Well, you pointed to me. It's like, no, man.
hundreds of $1,000s versus
No.
hundreds of $1,000s.
I have zero hundreds of thousands of dollars. But
So yeah, versus my, you know, my coins, my pennies in there. No, but yeah, good topic. Let us know what you guys think. Does the idea of an all digital currency scare you, or do you embrace it? Do you have any additional questions that maybe we can help answer or find answers to? We could do some research. Rohi is pretty good on Google.
Yeah.
And Jose keeps his ear to the street, so he can certainly give us some insight there. Anyway, this is the Weekly Jargon, and we want to thank you for watching, and take care.